Well, good evening, everyone. Hey, it is Shooter. We are going through swing trade notes. Of course, at the end of our presentation, please do review our disclosure. Got some solid 50% back candidates this week. A couple of them we might be a little early on, but I think the market pops a little bit. I think we got oversold last week a little too much. So, however, there were some data points that could send us to the downside Wednesday or Thursday. So we want to be conscious of that. But, key events are, Monday ISM, manufacturing, Tuesday's trade balance, consumer credit on Wednesday, EIA, crude inventory, MBA, etc. And Wednesday, those are the three that we could potentially go down from that. Thursday, continuing jobless claims, natural gas inventories, initial claims, and wholesale inventory. So again, those unemployment numbers are the big ones here. So I'm going to jump over most anticipated earnings here only because I'm trying to be expeditious. Decent P&L last week as far as profits. Beginning of the week, I thought I was going to get my butt kicked, to be candid with you. When everything started, the things just happened to come together by the end of Tuesday. So now might have been wrong on Microsoft. I might end up eating that entire spot there just because we only could exit our puts, or only exited the puts. So I really need about 428 or 429 on a price to get out of those on DE. So, and then Home Depot is not reacting to the storm, so we might need that as well. So it might start off with a little heavy next week. But TLT went in our direction here. Last I looked, it was 98 bucks. We had $100 calls, added some 100 calls for January. So we have a double position there at this point. Let's start off with our first 50% back candidate, Lilly. Now, note our confirmed low do not have a divergent low. So I'm still looking at this as drive one, drive two. So potentially we could drive three around 750. So now the August 9th 900 calls, I mean, they're way out there. They really are. Maybe a 15 or 30% trade. Actually puts a lot of risk on there. So I'm going to stay on the light side. And here again, I'm going to emphasize, we're still in the mindset of smaller position size. I've cut mine in half. Spent a long time running hot. Just last couple of weeks, we're trimming because of where the market is. Market conditions warrant reducing position size. So I would not give this much room below this one candle here. So 787, you go down 27 bucks on this, you're going to lose about 60% premium in those, but we have to sort of see how the market plays out. So watch for market strength in pre-market, which is going to determine really whether or not I jump on Lilly or not. All right. So now AMD, I actually like this better. However, here again, this doesn't look done to me. And when I measured this impulse leg, this would have been wave one down about 122, and wave 2, 3, 4, 5. And 5 wave brings us all the way back down to 90 bucks. This is the alternate count. So, however, it's still a setup. We have a confirmed low and a divergent low right here between these two little ticks here. But I'm looking at this as tag one, tag two, so maybe the third one down here. And I would like to see some significant push in RSI above 30, closer to 50% on that leg. Then that gives me some clean divergence to the upside. Like the September 145 calls, plan to add September 150 calls. And here again, that spread everything else. And there's a lot of people playing this one as well. Our swing trade target is 160. And actually, that reminded me, I didn't talk about that with Lilly. Our swing target is 870. All right, number 3 is the charm. I think I'm early, okay? Better entry at 79.69 because that's what the wave says. So we have this huge bounce here. Notice on this bounce from wave 1 to wave 2. Now, we don't get 50% back, right? Indicates weakness. So if we take it off of this candle, I like TTD. It trades, make a good buck on it. And it's got some decent volume on the strike. So I'd start with the August 85 calls and plan to scale into if we back test to 80 bucks. So I want to give it a little room down to that 80, right? Because this doesn't look done, which is close to where that wave went. So you want to look for that before. We really aren't. We don't have any indication here on RSI, so we don't have that push low and then one final flush to get us up and out of there to get that back test up here to this 2. But the counts all support a push, decent to the upside. So that's the thought. And our target is up around 91. So now where we take profits on this is going to really depend on market volume and how well it keeps growing versus petering out. That's what we've been seeing on a lot of the trades. They've been petering out. So with the exceptions of General Dynamics, it just ran. Okay. Most of them have been getting a little bit of a push and petering out, so I was taking, minimal gains just to basically stay green as you thought. One piece at a time, 30 to 50% is the game plan, rinse and repeat. Now, Nike looks better this week. Actually looks a little bullish down here. Strike the calls on this thing are astronomical. Okay, they're all the way up. So the September 20th 80 strike makes the most sense because of the spread, and plan to add October 85 calls as it keeps working, because those are going to get expensive really quick to add to the 80. Right now we're at 73. The better entry on this is at 71.57, so it's about buck 70 lower from where we are. And I would let this run. Nike is just going to, if it's going to keep going, 69, I don't think it's below 69. I mean, we have a nice divergent leg one, drive one. Right? When we get a drive two, we want a higher RSI ramp. So we don't want to be in this low. We want a divergent RSI, so we put in a lower low. Right? And we should not notice we close on top of the candle. So until we get some bearish candles down here, it's bullish to me. And I like it. Swing is about 85. Actually, my favorite looking chart. Not only that, we have this huge gap, right? We have a history of this sucker buying the gap, all right? And there's just traders all over this thing. I mean, at least 10 traders, I read their comments on Nike. So that's my thought on Nike. Did I express that I like Nike? Yeah. All right, Expedia. Actually, I didn't see this one until I saw it when I was covering primary waves. A note that hey, I didn't look at Expedia. God, I looked at about 300 charts. Why wouldn't I miss one? Okay, 50% back candidate. Close below 108, which is this gap. Then it's going to keep going. It'll probably be at 50% of the gap, so you're done. You want to be out there. Now, that's more room than I really want to give it. Better entry is at 110, but this will probably push too. And based on the calls out there, everybody thinks this is going to be number of write-ups, why it'll, all right? So the September 20th, because the spread was good on this. When I go off of the monthly target strike and I go to the week after, etc., it's because the spread's better, all right? I don't like ending or starting a trade in the red. So I don't like spreads. Never like spread. One, because I haven't figured out how to factor that into my risk model, so I like no spreads. Earnings is August 8th after the close. Now, keep in mind, I made a comment, you want to double check earnings dates on all of these, because some of them are earnings candidates, some of them aren't. The swing target's about 125. Now, I don't know if we're going to hold that, gets down to this 110. I might only hold it into about 50% of that gap and let it go and just take my profit next. Sort of that mindset. I'm looking at this. Nike reported earnings after the close on the 8th for TTE. And then August 8th is Lilly before the close. And that pretty much is what I got for this week, folks. Great trading. Until next time.